What if the rules you believe govern money don't actually exist? What if inflation, interest rates, debt, and economic growth aren't the natural laws you were taught they were? What if they are engineered outcomes shaped by hidden protocols older than the countries that use them? Because behind the numbers you see on the news, behind the calm tone of central bank announcements, behind every crisis blamed on market forces, there is another layer. It's a silent machinery that rewrites economic reality long before it reaches you. It operates without public votes. It evolves without public knowledge. And it influences your financial life more than any law you've ever read. Today, we uncover how these silent money protocols began, how they spread across the world, and why they still dictate the fate of economies from behind closed doors. To understand this system, we have to go far back before digital banking, before the Federal Reserve, even before the United States existed. The story starts in Europe, during a time when nations fought endless wars they couldn't afford. Kings desperately searched for a way to keep spending without raising taxes. And then came the early architects of modern finance. People like John Law, a gambler who realized that money could be expanded infinitely through debt. Or Mayer Amschel Rothschild, who built Europe's first true financial network. These were not elected officials. They were men who discovered a secret. Money didn't need to be real. It only needed to be believed. And from that realization, a protocol would emerge that still controls the world today. In 1694, England was broke. War with France had drained its gold reserves, and the government was desperate. A proposal emerged that would change modern history. What if private financiers created money out of thin air and simply lent it to the government? This was the birth of the Bank of England, and with it, the first modern example of money created from debt. Here was the silent protocol in its earliest form. Governments borrow money that never existed. Banks create that money by issuing credit. And debt becomes the very foundation of currency. There was no public vote, no public explanation. Just a quiet foundational rewrite of economic reality. As economies industrialized and countries grew, the need for more credit and therefore more money accelerated. Of course, crises emerged. Bank runs, recessions, currency collapses. And each time, a new institution was created to stabilize the system. In 1913, we got the Federal Reserve. In 1930, the Bank for International Settlements. In 1944, the Bretton Woods system. These weren't random reforms. They were upgrades to the original protocol. The world moved from gold-backed money to government-backed money, to credit-backed money, to what we have now, policy-backed money. Money that changes simply because someone in a closed room decides it should. By the late 1960s, the U.S. couldn't maintain the promise that dollars were backed by gold. The debt from wars and social programs was simply too large, and in 1971, the world crossed a line. President Nixon closed the gold window. Suddenly, money had no anchor. It was pure abstraction backed only by trust. The silent protocol became self-authorizing. Once money detached from gold, debt skyrocketed. Governments borrowed, corporations borrowed, you and I borrowed. Crises followed, one after another. The 1987 crash, the dot-com bubble, the 2008 meltdown, the 2020 emergency printing. And each crisis resulted in the exact same solution. Create more money, lower interest rates, expand the debt. The protocol kept working because it had to. A debt-based system can never shrink. It can only accelerate. There have been attempts to tame the system, austerity, quantitative easing, even negative interest rates. But every fix just led to more debt, more money creation, and more dependence on central banks. You can't remove the protocol because it's baked into the foundation. Trying to remove it would collapse the entire structure built on top of it. Today, the pattern is louder than ever. Global debt has surpassed $330 trillion. Over 40% of all U.S. dollars in circulation were created in just the last few years. Central banks now buy their own government's debt, a move that was once unthinkable. And digital money moves faster than any human can track. The protocol has gone algorithmic. We're not watching markets anymore. We're watching programmed behavior. So let's be clear, modern money is engineered, not discovered. It's a construct shaped by decisions made behind closed doors. Crises are not random external shocks. They are predictable consequences of a system built on expanding debt. And the economic reality, you see, is a managed environment, the output of invisible protocols, not natural forces. The next major rewrite won't look like a crisis in the beginning. It will look like an upgrade, a solution, a modernization. But every upgrade pushes the protocol deeper, making it less visible and more powerful. The question is not whether the system will reset, but whether you'll recognize it when it happens. If you want more deep dives into hidden monetary systems, global debt mechanics, and the financial architecture shaping your future, make sure to subscribe, hit that like button, and turn on notifications. This is just the beginning. Thanks for watching.